Okay, students, assalamu alaikum and good day to everyone. Let me let me welcome all of you in our resit batch of ATX June 2024. Since it is a resit batch, so let's just start with the question and then slowly and gradually I'll be discussing other things also. Obviously, you people are supposed to study the Finance Act 2023. And let's start. In this question, we'll be discussing the entire question, inshallah. Plus, I will also be discussing how to get a professional marks. You should assume that today's date is 1st June 2024. Okay. It's a 25 marks question from section B. Calculate Stella's income after tax and pension contribution for the tax year 2024-25. If she does pay 90,000 gross into her personal pension scheme. Okay. It's for everyone. It's for everyone. Whoever is giving paper in June 2024. So this class is for everyone. So calculate Stella's income after tax and pension for the tax year 2024-25 if she pays 90,000 gross into her personal pension contribution. So first you should be able to understand the requirement basically. In the final answer, whatever Stella's income is, from this income you have to deduct the tax, as well as you need to deduct the personal pension contribution. See, these things we'll be discussing later on. Right now, let's focus on this question, please. So from income tax, you need to deduct the tax as well as see, first, we need to know the income of the Stella and then just deduct the tax less personal pension contribution. Whatever the answer comes, this is the requirement. But obviously for this, we need to know what is Stella's income. Second, we have to calculate income tax liability according to the Finance Act 2023. And we'll see the personal pension contribution as well. 10 marks. B1. Explain how an amount withdrawn by Morris as lump sum. You have to focus on this lump sum, okay? Explain how an amount withdrawn by Morris as lump sum from her pension may be taxed. So you have to focus. When you will be explaining this, B part 1, so you're more focused, your answer should be around lump sum extraction of pension funds. Lump sum, that is very important, okay? 4 marks. B2. Advise Morris of the 2 relevant exemptions from inheritance tax which she will be able to use when making the birthday gifts, together with any conditions she will need to comply with in order to obtain them. How many marks? 6 marks. Advise Morris of 2 relevant exemptions, not 1, they're saying 2. From IHT, which she will be able to use when making the birthday gifts, and this together with any conditions she will need to comply with in order to obtain. So we'll be discussing this as well, basically. Let me welcome other students as well. Okay. See, in IST, when it comes to the exemption, basically the amount of the gift has to be up to £250 per tax year. The amount of the gift up to £250 per tax year. If you follow that, then it is exempt. It has to be £250 up to £250 per tax year, no matter how many number of recipients are there. For example, you have given gift to 5 people, but the total is not exceeding 250 in a tax year, then exemption is applicable. But if it exceeds 250 in the tax year, if the gift amount exceeds 250, then entire amount becomes taxable. So you have to make sure gift up to £250 each tax year is exempt. So make sure it should not exceed 250. So we'll be discussing other conditions as well, but there are 6 marks. So if whoever has seen, let's say, IHT topic nicely, properly, should be able to get at least, I would say, 5 marks out of 6. And there are 5 professional marks also. And what are the skills which they actually want us to, demonstrate? Number 1 is analysis and evaluation. So very important concept, analysis and evaluation. See, analysis and evaluation means you should know the data very well. You have to be really good in topic identification. If you can analyze the data properly, if you're really good in topic identification, so automatically you will be getting professional marks for the skill of analysis and evaluation. Now they're asking something else also, commercial acumen in your answer. See, commercial acumen means the way you have answered, it should look like that you are a wise person. You have a really good command on the topic. So while basically answering the question, I will also highlight the point where you'll be getting professional marks for the commercial acumen. But let me tell you one thing. Please listen to me very nicely, I would say, clearly. See, this, you're not supposed to do anything extra to get these professional marks. For example, while answering the question, if you're really good in topic identification, if you're dealing with the data properly, you are automatically getting the marks for analysis and evaluation. How you'll be getting marks for the commercial acumen? While answering this question, inshallah, I'll let you know. So good thing is, if you have a really good command on the area, whatever topic you are, whatever question you are dealing with that, if you can answer the properly, you will automatically be getting the professional marks. So let's now read the question. And good thing is, see, in Finance Act 2023, seriously, I would say there's no basis period calculation, which makes, I would say, Finance Act 2023 more easier. Even the 22 was easy, no doubt about it. But if there is no, I would say, basis period, so it makes it more easier. There's no calculation for the change of accounting date. There's no calculation of terminal loss. Examiner will give you directly the amount of the terminal loss. So I think elimination of these topics, they've made ATX more easier. Another thing is, once again, ATX has achieved the highest passing rate among all 4 professional papers. It was 49% previously, and it is still 49%. Second highest is AFM, 46%. Previously, I think AFM was somewhere 45, but now it is 46. So ATX, again, a leading paper when it comes to passing the optional papers. Let's read the question. Stella and Morris, you should assume that today's date is 1st June 2024. Okay, let's assume, there's no harm in assuming. Your firm has been asked to provide advice to two unrelated clients. One is Stella, another is Morris, on the tax implications of Stella making an increased contribution to her personal pension scheme. See, she wants to increase the contribution in PPC. You have to be really good in number of areas. Like you have to be really good in, you know, in calculating adjusted net income. You should be really good in finding out the threshold income. We'll be discussing each and everything. Don't worry at all. But the main thing, you have to be good in the name of the topic is pension. What each and every concept of pension should be very clear to you. Second, the receipt by Morris of lump sum payment. Lump sum. Again, the focus is on lump sum payment from a pension scheme. And inheritance tax exemptions available on proposed lifetime gifts. Now, if students listen to me, if you read these three lines again, so what examiner has exactly done, he has repeated the requirement again. So it is a normal, I would say, tradition in ATX that you will be having a requirement in the requirement section as well as at the start of the question, you will be having the requirement as well in section B. In section A, I would say you will get all the requirements in the email from your manager. So your manager in section A loves to email you and you will be getting all the requirements in the email from your manager. In part B, normally you will be having all the requirements at the top of the question. Now let's read what they're saying regarding Stella. Stella is resident and domicile in the UK. See, whoever is resident as well as domicile in the UK, that person is supposed to pay tax on his or her worldwide income. Received a gross salary of 2,03,000 in the tax year 24-25. Okay. This was a substantial increase on the previous year. Fine. Does not have an occupational pension. Very important point. There's no occupational pension. You should know one thing. If an employee contributes in an occupational pension, then such contribution reduces the employment income. Repeat. If an employee contributes in an occupational pension scheme, then such contribution reduces the employment income. If employer is contributing for you in the occupational pension scheme, let's say your employer is very nice towards you and he's also contributing in personal pension scheme for you. Let's say you are an employee. Both of these payment by the employer for the employee, they are exempt benefit for the employee. And last point, if an individual is contributing for him or herself in the personal pension scheme, such contribution cannot be deducted. Such contribution cannot be deducted from the income. It has different implications, which we'll be discussing right now, inshallah. Stella has property income from a portfolio of unfurnished properties totaling 92,000 in the tax year 24-25. Wow. So I think Stella is the one who's generating a really big amount in UK. The salary is very handsome and property income is, I think that is awesome also. Has no other sources of taxable income. So I think quite right. Stella does not need any other taxable income. That is a good enough amount. But it depends on Stella how she spends the money. Wishes to make an increased contribution to her personal pension scheme in the tax year 24-25. Okay. Personal pension scheme contributions. Stella has contributed 40,000 gross to her personal pension scheme in each of the tax year 23, 24, 22, 23, and 30,000 gross in each of the tax year 21, 22, and 2021. Now, let me just give you a little idea. Number one, annual allowance limit of the pension. Annual allowance pension limit is 40,000 pound. Annual allowance pension limit is 40,000 pound. How actually this limit will be consumed? There are maximum 4 contributions which will consume this annual allowance limit. Let's say less gross PPC of employee, let's say. If employee is contributing in occupational pension plan, deduct that also. Employees contribution in occupational pension plan. If your employer is also contributing for you, let's say employer is very nice, employer's contribution in occupational pension as well as personal pension. So these are the 4 ways in which this annual allowance limit will be utilized, will be consumed. Now there are 2 possibilities. One, let's say either you'll be having all 4 ways of consuming this 40,000 limits in the question, or maybe one of them, 2 of them, whatever it is. Let's say after deducting whatever contribution was available. Now there are 2 possibilities. One possibility that you are still having unused amount. Let's say if your answer is positive, it means you do have still unused annual allowance limit. Now the question is, if you have unused annual allowance limit, what to do with that? Please listen. Unused annual allowance limit. Unused annual allowance limit is carried forward for 3 tax years. And we use this on FIFO basis. Repeat. Unused annual allowance limit is carried forward for 3 tax years and it is used on FIFO basis. Okay. Now there's another possibility also. What if the contribution is more than the limit? Then obviously in that case, instead of positive, you'll be having negative amount. It means another scenario. If contribution exceeds annual allowance. See, if contribution exceeds annual allowance, then the difference is if contribution exceeds annual allowance. I'm talking about which contribution? Whatever given in the question, maximum there are 4 contribution in the question. There's a possibility you might be having only 1 contribution, 2, 3, whatever it is. If the contribution exceeds the annual allowance, then the difference, for example, let's say it is 70,000 and you just have a limit of, I'm assuming only 40. There's no any other unused limit. It means how much you have contributed more than the annual allowance, 30,000. This 30,000 is actually treated as annual allowance charge. It is treated as annual allowance charge. And on this annual allowance charge, you have to pay income tax. You have to pay income tax. And applicable tax rates are from the non-saving income. Applicable tax rates are from the non-saving income. And obviously, this annual allowance charge will be taxed at the end. So simply, if your contribution is exceeding the annual allowance, then it is treated as annual allowance charge. This annual allowance charge is simply taxable. Applicable tax rates you will take from the non-saving income, and this will be taxed at the end. Let's say you have already applied tax rate on each and every income which is given to you. After that, you are going to deal with annual allowance charge. So obviously, whenever you're solving a question in ATX, so obviously there's going to be one possibility out of two. Either there will be an unused limit or the contribution exceeds annual allowance. Okay. Now, relating to this, there's one more concept. What is that? That is adjusted net income. ANI. If ANI exceeds 1 lakh, if adjusted net income exceeds 100,000, then the personal allowance, which is 12570, which is same, it was in the Finance Act of 2022 as well as in 23, it is same. So if your adjusted net income exceeds 1 lakh, then your personal allowance will reduce. ANA minus 100,000, then just take 50% of that. How do we calculate adjusted net income? Simply you have to take the net income. From this net income, we deduct gross PPC. Gross personal pension contribution. We also deduct gross gift aid donation. Gross gift aid donation. But let me tell you one thing. This gross gift aid donation is not tax. In ATX, it is not taxable. So in ATX, you will have only net income and gross PPC. So it means the relevant format for us is take the net income and simply deduct gross PPC. That's it. Okay. Now, again, relating to the pension, there is one more concept, one more rule which you have to know. What is that? See, let me change the color of the pen. Annual allowance limit is 40,000 pound. Annual allowance limit is 40,000 pound. But there are two conditions. If both of them are met, then this annual allowance limit of 40,000 pound will reduce. Repeat. There are two conditions. If both the conditions are met, then your annual allowance limit of 40,000 pound will reduce. The minimum annual allowance can be 4,000 pound. It cannot go below 4,000. But if you talk about personal allowance can be 0. Now the question is, what are those two conditions? If but both of them must be met, okay? If both of the conditions are met, then your annual allowance limit will reduce. Let me quickly give you the idea what are those two conditions. One is your threshold income has to be more than 200,000. Yeah, video will be available on the YouTube. Don't worry at all. I will upload the video. Inshallah, it will be available on the YouTube. No issue at all. Okay. So we were discussing there are two conditions. If both of them are met, then annual allowance 40,000 will reduce. One is threshold income. If threshold income exceeds 200,000 pounds, if threshold income exceeds 200,000 pounds, now the question is, how do we calculate threshold income? Please listen to me very nicely. The format of threshold income and adjusted net income is same in ATX. Repeat. Format of threshold income and adjusted net income is same in ATX. No difference at all. So in order to reduce the annual allowance limit of 40,000 pounds, the first condition which has to be met, that is threshold income. And let me repeat again. The format of the net income, this is adjusted net income and threshold income is same. Means you have to take simply net income less gross PPC. It is also considered as threshold income, but this time it has to be more than 200,000. This is condition number one. The second condition is your adjusted income. You can say adjusted total income. Adjusted income must exceed 2,40,000. Adjusted income must exceed 2,40,000. If your adjusted income exceeds 240, if your adjusted income exceeds 240, then obviously both the conditions are met. Only then your annual allowance limit will reduce. Now the question is, how do we calculate adjusted income? Another name could be adjusted total income. Let me give you the format of this adjusted income. Just take net income. And you now have to add employees' contribution in occupational pension plan. Plus, if your employer is very nice towards you, chances are less, but let's take a chance. Then add employer's contribution as well. Let's say you're not the only one who's contributing in occupational pension plan. Let's say your employer is really nice towards you. Again, difficult to find. He's also contributing for you. Add that also. If this answer comes more than 2,40,000, then you will not be getting annual allowance 40,000. Your annual allowance will reduce. What is the format for that? Annual allowance is 40,000 pound less. You have to take the adjusted income, which is in the question. Minus 2,40,000 into 50%. And let me tell you one thing. Never forget one thing. Annual allowance is 40,000 pound. Assuming, I'm just assuming, okay, that your adjusted income is, let's say, 4 lakh minus 240. Obviously, the difference is 1 lakh 60. If you take 50% of 1 lakh 60, it is 80,000. But instead of writing 80, I'm writing just 36. Can I say annual allowance cannot be less than 4,000? So if you come across a data where mathematically your answer is going to be less than 4,000, then you have to restrict yourself to at 4,000. So simply your annual allowance cannot be less than 4,000. Okay. If you look at this, if your adjusted net income exceeds 1 lakh, then obviously your personal allowance will reduce. A very important point relating to this, if your adjusted net income is more than equal to 1,25,140, then your personal allowance becomes 0. Repeat. If your adjusted net income is more than 1,25,140 or equal to that, then your personal allowance becomes 0. Let's come back to the question. Okay, one more final point relating to this. See, we have discussed unused will be carried forward for how many years? 3 tax years. It will be utilized on FIFO basis. But now listen, this facility that there's an unused annual allowance, you can carry forward for unused annual allowance for 3 years, utilized on FIFO basis. All these facilities are only available when an individual is a member of registered pension scheme. If someone is not a member of registered pension scheme, then obviously these rules are not even applicable and these facilities are not available at all. Now the question is, what do you mean by registered pension schemes? Actually, in ATX, even in taxation, we have just 2 registered pension schemes. One is occupational pension scheme, another is personal pension scheme. So if there is any unused annual allowance, you can carry forward and utilize that on FIFO basis, but it is only possible when an individual is a member of registered pension scheme. And let me tell you one more thing. If your examiner does not give you the exact date of registration, then obviously if your examiner says this person was contributing in personal pension scheme previously as well. So whatever date is mentioned in the question, we will assume that from that date onward, that person was a member of a registered pension scheme. Okay. Stella has contributed 40,000 gross to her personal pension scheme in each of the tax year 23, 24, 22, 23, and then 30,000. That is very important. In each of the tax year 21, 22, and 2021. I've given you the concept, the rule. Unused annual allowance can be carried forward only for 3 tax years. The full annual allowance without restriction was available for the tax year 2021 to 23-24. Very important point. The full annual allowance without restriction means that is from 2021 till 23-24, entire 40,000 annual allowance on each tax year was available. It means there wasn't any restriction. So in each of the tax year, 40,000 was available. We have just discussed if 2 conditions are met. One is if threshold income exceeds 200,000 and your adjusted income exceeds 2,40,000, then your annual allowance limit will reduce. But examiner has given you a very good, I would say, point over here that In the previous tax year, there wasn't any restriction. So it means entire 40,000 was available. Now what is happening? Stella wishes to make an increased contribution of 90,000 gross in the tax year 24-25. We'll be reading the Morris later on. Don't worry at all. Now, again, read the requirement, what they are saying. You should assume that today's date is 1st June 2024. Calculate Stella's income after tax and pension contribution for the tax year 24-25. If she does pays how much gross? 90. So students, first we need to calculate her income tax liability. Let's try. So let's simply calculate Stella. Stella's income after tax and pension contribution. After tax and pension contribution. Jessica question we have already done in our revision classes. Okay, now let's see. What about the income? Stella receives a gross salary of 2,03,000. This is the only employment income. And the property income is 92. So you can see the amount of income which she is generating, mashallah. So employment income is 2,03,000. Property income 92. Obviously, if I add 2 into 3, I'll get 5 and 295 simply. That is your net income. Now, the first thing we need to check, either Stella is going to get personal allowance or not, because the amount of the net income is far more than 1 lakh. Personal allowance, working. Let me just show the working over here. Can I say first we have to calculate adjusted net income? You will take net income which you have already calculated. 2,95,000 less gross PPC. How much gross Stella wants to contribute? 90,000. Even we deduct 90. Oh, you can see that. Can I say her adjusted net income is far more than 1,25,140? Since it is far more than 125,140, can I say the annual allowance has to be 0? Yes or no? Personal allowance has to be 0. So ANI is actually more than 1,25,140. So therefore, personal allowance is 0. So working one, simply the personal allowance is 0. So entire net income of 2,95,000 becomes the taxable income. Now let's calculate income tax. The good thing is both the incomes are from the non-saving source of income. So before calculating income tax, we have to increase, can I say basic as well as higher rate band by the gross PPC. So let me show you one more working two somewhere here. Basic rate band as well as higher rate band. Can I say basic as well as higher? Both the bands will increase by gross PPC. Plus 90,000. So can anyone use the calculator for me, please? 37,700 plus 90. Higher rate band. Now we know that higher rate band limit is 1,25,140. It has changed. Previously, it used to be 150. Now in Finance Act 2023, it is 1,25,140. Thank you. 1,27,700. So I have to add 90 as well here. Please, I need help. 2,15,140. Thank you. So simply your basic and higher rate band limits, they have increased. Okay, fine. So 1,27,700 into 20%. Working two. Please, I want you to use the calculator. It makes little bit fast, please. 1,27,000, or should I be using my calculator? 1,27,700 into 20%. 25540. Thank you. 25,540. Okay, students, you can see that this taxable income is even higher than the limit of higher rate band. Am I right? The taxable income which we have to tax is even higher than the higher rate band, which means that the difference of 1,27,700 and 2,15,140, the difference will fall in higher rate band because this 2,95,000 is even higher than the higher rate band. So the difference of 2,15,140 minus 1,27,700, or if you take the difference of these two values, it will be same obviously. So can anyone tell us? 87,440. 87,000. Please use the calculator. Into 40%. 87,000. 34,976. Can I say since this 2,95,000, it is even higher than the higher rate band limit. So whatever amount is higher than the higher rate band limit, that falls in additional rate. So from this 2,95,000, actually we will deduct 2,15,140. Repeat. From this 2,95,000, we will deduct 2,15,140. Whatever comes, obviously that falls in additional rate. So can you tell me the difference of these two? What is the difference of 2,95,000 minus 2,15,140? I'm getting 79,860. Great. Applicable tax rate is obviously 45%. What is the amount? 35,937. Obviously, you are not supposed to stop here. Why? You can see, look at the amount of Stella's income. Plus, the examiner has given you how much Stella has contributed in the past. In the current year, she is having a wish to contribute gross 90. So, by looking at the amount of 2,95,000 and by looking at her adjusted net income, which is in fact, look at this. Look at this adjusted net income, it is more than 200,000. As we have just discussed, the format of adjusted net income and threshold income is same. And we know the rule. If threshold income exceeds 200,000 and adjusted income exceeds 240, if both the conditions are met, then annual allowance, obviously, in the current tax year will not be 40, it will be less than 40. But annual allowance will only be reduced when two conditions are met. So it can be seen the number one condition is in front of us, which is met because the threshold income is actually more than what? 200,000. So let me show you one more working. Working 3. We are just repeating the working, nothing else. Threshold income. Net income is 2,95,000 less gross PPC. So your threshold income, it is more than 2 lakh, no doubt about it. Now let's see adjusted income. Let's take net income. Can I say in the question number 1, it is categorically mentioned there is no occupational pension plan. So obviously, then contribution of employee in OPPC will not arise at all. There's no such thing in the question. It means add, can I say employees contribution in occupational pension plan? We do not have. There's no such thing. In fact, employer's contribution. There's no employer contribution. So entire 2,95,000 is your adjusted income, which is more than 240. Now, a very, very important point. You have to explain the examiner. Let me tell you. The first working which we show. We calculated the adjusted net income and then we have just shown our examiner that ANI is more than 1,24,000, 25,140. That is where personal allowance is 0. Now, obviously, both the conditions are met. Adjusted income is more than 240 and threshold is more than 200,000. Even though both the conditions are met and you have obviously shown in the working, but still you have to write a rule nicely. And after that, show the how much annual allowance is available. It means simply adjusted net income. Can I say it is more than 240? And threshold income is more than. Therefore, annual allowance limit will reduce. In current tax year, because in the previous tax year, there wasn't anything. In fact, it is mentioned in the question that previously entire annual allowance was available. So annual allowance limit in the current tax year, which is 24-25. So annual allowance limit in the current tax year 24-25 will reduce. Let's see. We have annual allowance 40,000 pound. 295. Please, I want someone to use a calculator. 295 minus 240 multiply by 50%. Please quickly answer. 27,500. So it means 12,500. So instead of 40, now annual allowance 12,500. This is available. We have simply revised. Okay. Now let's check. Is there any unused annual allowance from the previous tax year? Because we have discussed the rule. In case of unused annual allowance, it is carried forward for 3 tax years and utilized on FIFO basis. Let's see what question says. Jessica, we have already solved. Number one, the current tax year is 24-25. We are actually working for 24-25. Okay. We have discussed unused limit can be carried forward only for 3 tax years. Utilized on FIFO basis. If the current tax year is 24-25, it means if I go 3 tax year back, so it will be, can I say 23-24, 22-23, 21-22. First of all, unused limit of 21-22 will be utilized because unused limit of the tax year is carried forward for 3 tax year and utilized on FIFO basis. After that, if you have unused limit of this tax year, 22-23, and after that, 23-24. So it means if I just show you the working properly, how many workings we have done? Working 3. Let's go for working 4. Now we need to check exactly what annual allowance is available in the tax year 24-25. Available in 2024-25. Number one, we have calculated 12,500. Now listen and listen carefully. FIFO basis means obviously after the current tax year. I have written tax year somewhere. You will be using the unused limit from 21-22, then 22-23, and then 23-24. So it means that simply add unused annual allowance from number one is going to be 21-22, then 22-23, and then obviously Now let's see what question says. How much she was contributing previously? Stella was contributing 40,000 in the tax year 23, 24 and 22, 23. It means no unused limit. But she contributed 30,000 in the tax year 21, 22. Can I say this 2021 is irrelevant for us? She contributed 30,000. So in the tax year 21, 22, she contributed 30. It means unused limit is 10,000. Forty minus her contribution is just 30. Over here, the limit is 40, and can I say she contributed 40? 40 and she contributed 40. So logically, the maximum amount in the tax year 24, 25 is how much? 12,500 plus 10. That is 22,500. But the problem is how much she wants to contribute. That is very interesting. Students are saying this in annual allowance charge. Let's say how much she wants to contribute. Great. Student is right. See, actually, she wants to contribute far more than what the limit is available to her. So if you contribute more than the limit which is available to you, so definitely annual allowance charge will arise. And that's nice. The student has already given the answer. So annual allowance charge. She wants to contribute 90, but available limit is only. So student has given the answer. How much? It was 67,500. Can I say number one, this 65,500 is taxable. Second, we will apply the tax rate from the non-saving income, and we are already in the additional rate band, if I'm not wrong. We are already in the additional rate. It means 67,500 into 45%. And which working is this? Working number. Working number is 4. Please, I need the answer. 67,500 to 40 or 45%. 30,375. Please, can someone add this all to get the income tax liability? Please, I need income tax liability. That is 1,26,828. 1,26,000. So it is 1,26,828. Okay. But again, this is not the final answer. Question says calculate Stella's income. We know her income, but from her income, you need to deduct. Number one is tax, second, the contribution. So let's calculate. Income after tax and pension contribution. We have already calculated net income, which is 2 lakh I think 95,000 if I'm not wrong. From this 295, let us deduct the income tax liability which we have calculated. So only you are not required to deduct only income tax liability. They are asking deduct also what? Pension contribution. So pension contribution. Please student look at this. She has contributed 90,000, but the examiner has written it is 90,000 gross. We know that in personal pension, whatever you contribute, actually it is 80%. 20% is paid by HMRC. It means her actual contribution is not 90. Her actual contribution will be, can I say, 80% of the 90,000. Actually, the outflow of the cash will not be 90,000. The outflow of the cash will be 80% of the 90. If I take 80% of 90, it is 72,000. An examiner is asking us to calculate Stella's income after tax and pension contribution. So it means you need to deduct two things. You have to deduct income tax as well as pension contribution. But in pension contribution, please, you should know one concept very well, the rule very well. Whatever individual contributes, it is 80%, 20% is paid by HMRC. An examiner has categorically written 90,000 is the gross amount. It is not the actual amount which Stella has paid. So it means the payment is 80% of 90,000. So simply personal pension contribution and we need paid. Now what is the final answer? Yes, yes, yes. You will get the, it will be shared in your relevant WhatsApp group. Don't worry at all. And whoever is enrolled, I think everybody knows that these documents are uploaded on the portal as well. 96172. 96,172. This is simply your income after tax and pension contribution. So students, you can see one thing. This is your final answer. Obviously, to reach here, you have done number of things. We did discuss concept of ANI, threshold income, adjusted income, all these things. So obviously, in a 25 marks question, you should not be expecting a one topic. The examiner is going to ask number of topics. Again, it's a normal tradition in ATX. Let's go towards part B. B1. Let's read the requirement just a minute. B1. Explain how an amount withdrawn by Morris as lump sum from her pension may be taxed. How many marks? 4 marks. Again, the focus is on lump sum. Okay. Now, let me tell you one thing. Basically, let me just give you the idea somewhere here. Basically, we have lifetime allowance limit, and that limit will be given to you in exam. The lifetime allowance limit is 1,073,100. I just want to give you the idea, okay? Then we'll be discussing properly, inshallah, B1. Basically, the lifetime allowance limit is 1,073,100, okay? Logically, individual can get 25% lump sum, but lower of two values. Number one is lifetime allowance, and the second is available funds in the pension, whichever is lower. So 25% of that amount is exempt. Second, what if the amount, basically we have to focus on lump sum. So that is why I'm giving you the idea. 25% lump sum lower of annual allowance, lower of the lifetime allowance, and available funds in the pension scheme is exempt. What if your amount is more than the annual allowance limit? If your amount is more than the lifetime allowance limit, then obviously additional amount you can take lump sum, but on additional, when you take the additional amount, additional means the amount which is over and above the lifetime allowance. You can take that amount as lump sum, but you have to pay tax 55%. So let's read the question and then we'll be discussing these points, inshallah. And this lifetime allowance limit will be given to you in exam, okay? So this requirement actually relates to Morris. Let's read. Morris is resident and domicile in the UK and is widowed, okay? Has 3 married children and 5 grandchildren under the age of 12. Attained the age of 68 on 30th January 2024 and decided to vest some of her pension benefits on that date, okay? She should have taken earlier, but now she has decided. Wish to make regular gifts to her family. In order to reduce IHT, will come to that. Don't worry at all. Personal pension funds. Please, that is very important. This data is extremely important. Morris had a money purchase pension scheme which has valued. Can I say the value of the fund is more than the lifetime allowance limit? Lifetime allowance limit is 1,073,100. Morris would like to some advice on the tax implication of drawing lump sum from this pension. Lump sum from this pension, okay? Morris need lump sum. B1. The name is Morris. Lump sum, let's say pension income. Now please listen and let me repeat again. Actually, the rule says 25% lump sum lower of lifetime allowance and available funds in the pension is exempt. Can I say in our question, available funds are more than lifetime allowance, which means that 25% of, can I say, 25% of lifetime allowance will be exempt. Am I right? So pension funds are actually more than the lifetime allowance. And let me repeat again and again, I'm repeating this lifetime allowance limit will be given to you in exam. Lifetime allowance of 1,073,100. So it means that, can I say, if this is the case, then accordingly, what will be exempt? The exempt amount will be 25% of this limit. Yes or no? Accordingly, exempt amount is 25% of lifetime allowance. 1 million. I need someone to use the calculator, please. 1,73,100 into 25%. It is 2,68,275. Thank you. Jazakallah. 2,68,275. Okay, that's great. Now, another point you have to mention regarding since the amount is even more than the annual allowance limit. So, what is the rule of getting excess amount, lump sum? If the excess of the funds which is over and above the lifetime allowance, if taken as lump sum, what is the rule? 55% charge. Perfect. So fund which is more than, can I say, annual lifetime allowance, if that is taken as lump sum, then applicable income tax charge is 55%. So we have fund available. They have given us um, 1,550,000. Less lifetime allowance. 1,73,100. So can you please give me the answer? Excess amount? Excess of funds over lifetime allowance. Please, I need the answer. Excess of funds over lifetime allowance. Four lakh 76,900. 4,76,000. Can I say excess of funds over lifetime allowance? This excess is tax. On this excess, income tax charge is 55%. So lump sum yes, obviously you will. Now every paper is computer based. But lump sum. If we take this lump sum, then we have to pay how much? 55%. Lump sum excess of funds over lifetime allowance. Income tax charge is 55%. 4,76,000 into 900 into 55%. Can you please give me the answer? Please. 55% off. That is 2,62,000. 295. Great. Okay, now the balance which is still left, the balance when Morris is going to withdraw, obviously that balance is going to be treated as non-saving income, and obviously tax rate, whatever appropriate tax rate would be at that time, it would be applicable. And by looking at Morris income, you can say that obviously either applicable tax rate is going to be 40 or maybe 45%. Because look at the income which Morris is generating. So simply withdrawal of the balance from lifetime allowance can I say pension income is actually treated as a non-saving income. So withdrawal of balance from the lifetime allowance will be treated as non-saving income. And can I say, and applicable tax rates it will be, can I say, applicable tax rates would be 40, or can I say there's a possibility of 45% is also possible. Why 45% is also possible? Can I say, look at her income, which is, they have mentioned something. Morris. By looking at amount of income, we can say Morris is going to pay either 40 or 45%. Otherwise, you can write one more thing. Simply, you can write whatever will be the appropriate rate that will be applicable. Appropriate rate will be applicable. Appropriate rate could be from the non-saving income. Where is the answer? Applicable tax rates would be 40, 45% is also possible if income is more than, in case of 45%, can I say income has to be more than 1,25,140? Then 45% is applicable. Obviously, only on the income which is over and above 1,25,140. I think regarding how the main question was, Morris is more interested in lump sum rather than what is going to be done with the balance of the amount. But you have to also mention what will be done with what is the treatment of the balance of the amount as well. Now let's go back to the question again. B2. Advise Morris of two relevant exemptions from IST, which she will be able to use when making the birthday gifts together with any condition. We'll come to this. Do we have any other information? Assets and income. In addition to the pension income, saving income totaling around what? Oh. So can I say by looking at 60, you can easily say Morris is a higher rate taxpayer. So you can add this as well in your answer. Applicable tax rate would be 40 or 45%. You can say that. Why we are saying 40 or 45? So applicable tax rates are, let's say 40, or you can say this, applicable tax rate would be 40 because Morris is a higher rate taxpayer. Now you can say that. Or 45% is also possible. 45% is also possible if income exceeds 1,25,140. So 40 for sure, but there's a possibility of 45 as well, provided that the income exceeds 1,25,140. So obviously the income which is more than 125, 140, that on that income we will apply 45%. Okay. B2. Advise Morris two relevant exemptions from IST. She will be able to use what she wants to do. This is dividend, all that stuff. The shareholding in the quoted company are currently valued 980. So Morris is very rich. There's no doubt. Morris wishes to gift some of the shares or the dividend income to her children and grandchildren on their birthday each year. See, Morris wishes to give some of shares or dividend income to her children and grandchildren on their birthday gifts each year. Okay. Morris already makes gifts each year to use annual exempt of IST, which is £3,000 every tax year. Okay, let's see. So what are the exemptions of IST? So basically, we just need to discuss lifetime exemptions, but obviously according to the question, okay? Nothing else. You're not supposed to discuss marriage exemption. You will not be getting any marks at all. It is not in the question. So IST, simply lifetime exemptions. I think at the start of the question, we did mention that gift up to £250 each tax year, okay, is exempt, irrespective of the number of recipient. But you have to make sure the gift should not be exceeding £250 each tax year. This £250 is each tax year. It is not per recipient. It is per tax year. So simply, Morris can get a small gift exemption. Small gift exemption. So in order to get the small gift exemption, Morris will have to make sure that amount of the gift should not exceed £250 each tax year. So Morris can get exemption of gift from IST, provided that amount of the gift is not exceeding £250 each tax year. It means up to 250 pound, each tax year is exempt, no matter how many recipients are there. But make sure if this 250 pound exceeds, if the limit of 250 pound exceeds, then entire amount becomes taxable. So Morris can get exemption of gift from IHT provided that amount of the gift is not exceeding 250 pound each tax years. Okay. You can also mention that if gift amount exceeds 250, then entire, not the excess, entire amount becomes taxable. So a small gift exemption, this is one. But examiner has not asked us only one exemption. I think he was asking two, if I'm not wrong. Advice Morris of two relevant exemptions. So one we have told, let's say Morris, what could be the second one that is more important? Look at this. Morris wishes to gift some of the shares or the dividend income. Now listen. There's another exemption available in IST. That is, if you're doing a routine expenditure. If I give you the example, for example, parents, they're giving their children fee, a school fee. Obviously, when parents are giving their children a school fee, it's a routine expenditure. This is exempt from IST, but it does have some condition also. For example, if there is a routine expenditure out of the income, make sure that routine expenditure should be from your income. It should not be from your capital. Capital means you are not supposed to sell your asset and provide that gift. So obviously we don't have such expensive schools, for example, that parents they start selling their capital assets and then giving school fees. I hope we don't have such expensive schools, and nobody chooses such schools, obviously. Let me repeat. So the normal expenditure out of income, that is, they are also exempt, but provided that such expenditures should be given out of the income, not from capital. Means instead of selling the shares and giving the gift, you should be providing, let's say, from the dividend income. Another condition is such normal expenditure should not reduce the living standard of the donor. Repeat, such normal expenditure out of income should not reduce the living standard of the donor. See, if this is the case, then obviously your normal expenditure out of income, they will be exempt. So exemption is available. And let me tell you one more thing. As I given you the example, parents, they are paying a school fee. So obviously each school is not charging the same fee. Each school is charging a different fee. So such expenditure which are out of income, they are exempt and we do not have any limit on that. Make sure just you need to meet the conditions like they are out of your income, they are not from your capital. And after making such normal expenditure of out of income, donor living standard is not affected. So if this is the case, then obviously your normal expenditure out of income, they are exempt and there's no limit on that. Okay. So exemption of normal expenditure out of income. We do have another exemption. Exemption for normal expenditure out of income. They will be exempt, but with obviously you need to meet few conditions. So normal expenditure out of income following conditions must be met. Okay, can I say when I'm again repeating the same example again and again, when the parents they provide a school fee, they do not provide only once. You will see a regular pattern of providing the gift, school fee, yes or no? So there has to be a regular pattern. I think they have mentioned in the question also. See, Morris wishes to gift some of the shares or dividend income to her children and grandchildren on their birthday each year. So this gift is not going to be just one off. There will be you'll see a regular pattern of giving this gift. Regular pattern of providing the gift. Can I say gift should be from the income, not from capital? The gift should be out of income, not capital. It means Morris is not supposed to sell the shares. Morris should be providing a gift out of income. Let's say from the dividend income, you can do that. So it will be in the form of cash rather than selling the shares and providing the gift. So gift should be out of the income, not capital. Another point, such gifts should not reduce living standard of donor. If this is the case, then obviously your normal expenditure out of income is exempt. And let me tell you one thing, there is no limit on this exemption. There is no limit of amount of this. Do not get confused this with the 250 pound. Both are different things. Okay, now let me just quickly give you the idea. Like when it comes to professional skills, I did mention earlier at the start of the question. See, analysis and evaluation means obviously you have to know the data very well. If you know the data very well, you'll be getting this marks. You have to do the calculation properly. You have to identify all the rules. Now, how you'll be getting the commercial acumen marks? That is very important. Okay. I think while answering this question, if I'm not wrong, the Stella one, while answering this Stella one, we did highlight the concept, the rule, where annual allowance limit will be reduced. Annual allowance limit will reduce if the two conditions are met. And obviously, in this question, both the conditions were met, and we did show the calculation that instead of 40, the annual allowance limit was reduced to other amount. So if you have that skill to show such calculation, you will be getting a commercial acumen marks. Plus, there was one question on this Morris regarding lump sum extraction. See, in lump sum extraction, commercial acumen means if you are a commercially wise person, you must know the limit of lifetime allowance. You must know the limit of lifetime allowance. So as I mentioned earlier at the start of the question, that if you have simply properly answered the question, automatically you will be getting professional marks. You're not supposed to do anything extra, additional to get professional marks. Now, let me just quickly sum up. At the start of the this reset batch orientation, there was a question regarding how to prepare, what to do. To be very honest, what should be the sequence of preparing and getting yourself ready to attempt this ATX paper? I'll be very quick and then I'll take your question if you have. See, number one is in entire, I would say now little there is a change. ATX Finance Act 2023. We have pre-recorded. Actually, in 78 lectures, we have completed the entire course. But these 78 lecture, each lecture is on average, I would say 45 minutes long on average. You will see some of the videos could be a little bit longer than 45, but you will see number of the videos, they will be even less than 45. On average, they are 45 minutes long. This is product number one. Second, live revision classes. We started from one class per week, but now obviously I am planning to go for 2 classes per week, revision classes. Extremely important. In each class, normally we cover one proper question from the Kaplan kit of Finance Act 2023. Now we'll be starting the test as well. At least the target is at least go for 10 tests. But let me tell you one thing. You will be provided, the test will be given, shared by the admin with you. You will attempt the test. We are not going to check your test. You will be checking your test by yourself, but you will be getting either you will be getting a video lecture on that test, or we'll be discussing that test in the live revision class. Practice videos. Let's say from 79 onwards, all are practice videos. So from 79 onwards, the plan is to go at least to go for 110 plus videos. So from 79, the target is to go 110 plus. Let's say it could be from 79, we can go till 120. All will be practice videos. So seriously, if you have given the test, you have seen and you have let's say attended all the live revision sessions, practice videos. Plus, in this attempt, we have introduced one more thing. Inshallah, we will conduct that class also. Live grand revision class will be there, inshallah. Plus the mock with the feedback. And one more thing, I think those students they are enrolled, they will acknowledge this thing. My focus notes within just 90 pages, the entire ATX we have alhamdulillah covered. So if you go through all these things, if you are watching all the lectures, and especially look at today's class, seriously, whoever seen the lectures, obviously there are students from my regular class as well. You can see that just by doing this question, we have actually revised so many topics. So actually, in live revision classes, we are actually revising ATX through questions. And never forget our smart revision. but it comes very near to exam. Smart revision. Within 9 hours, inshallah, within 9 hours, the revision of entire ATX. Within 9 hours, the entire ATX gets completed, inshallah. So smart revision, just 9 hours, and the entire, all, each and everything of ATX will be covered within 9 hours, inshallah. ASA, if I just quickly give you the ASA admin number. If you're outside the Pakistan, 0092 333 666 214. Those students, they are within Pakistan. So I hope that you people have enjoyed today's class. I've tried to discuss a number of topics according to the Finance Act 2023. Each and everything is available in each and if you join resit batch, you will get each and everything. Yes, those students, they are enrolled, they will get inshallah each and everything. And whoever is going to join the resit batch will get each and everything. Don't worry at all. We provide our all products to our students, no matter they are in the resit batch or they are in the regular batch. All the products will be given to you because the objective is to make you pass the paper. So thank you very much. And obviously, I'll say have a nice life rather than nice day because the life is itself very short and the day is very, very short, obviously. So have a nice life. Okay, there's one question from Obed, I believe. Obed, well, if you have joined my course, so I think if I'm not wrong, there are other students as well. I have shared the focus notes as well. Plus, you should be having the access of the lectures. Oh, you joined today, Obed. Please, yeah. Admin is going to give you each and everything. Don't worry at all. Inshallah. By morning, you'll be getting each and everything. That's why I was surprised that if you join. Okay, thank you very much. And thanks a lot. Okay, guys. Okay. Assalamu alaikum.